Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about ARHAUS INC quarterly report. ARHAUS Inc. offers a wide range of home furnishings and lifestyle products through its premium retail business. The company's product categories include furniture, bedroom, dining room, living room, and home office furnishings outdoor products. Furniture, lighting, textiles, decor, umbrellas and fire pits lighting fixtures, chandeliers, pendants, table and floor lamps, and sconces textile products, handcrafted indoor and outdoor rugs, bed linens, and pillows and throws decor products. Wall art, mirrors, vases, candles, and other decorative accessories. The company distributes its products through various channels, including showrooms, e-commerce platform, print and digital media, in-home designer services. The ARHAUS Inc. stock price has remained relatively stable over the past year, with no significant changes, exceeding a -3.09% drop. While several notable company-specific news events occurred during this timeframe, their immediate stock price reaction did not explicitly show a decline greater than 3.09%. Notable news events include the launch of ARHAUS Fall 2025 collection and the opening of its largest showroom in Pasadena, California. These events were generally considered positive for growth. Additionally, the company reported record net revenue in the second quarter of 2025, marking a 15.7% increase. However, the third quarter 2025 financial results led to a decline of 3.74% in pre-market trading due to investor concerns over October demand softness and tariff impacts on the future outlook. Daily stock price fluctuations in late October 2025 also resulted in drops greater than -3.09%. The primary drivers of revenue growth or decline in the company's financial performance can be summarized as follows. Revenue growth is primarily driven by an increase in net revenue, client deposits recognized as net revenue within 12 months, and interest income from cash and cash equivalent investments. The sales to clients in the United States, particularly through retail and e-commerce channels, also contributed significantly to revenue growth. In addition, the assortment of merchandise across various categories, including furniture, outdoor, lighting, textiles, decor, and bath, has been a key driver of revenue growth. Furthermore, the opening of new showrooms and increased demand for products have also positively impacted revenue. Overall, these factors have resulted in an increase in net revenue by 10% and 9.7% in retail revenue and e-commerce revenue, respectively. Net income and profit margins overview. The company's net income experienced a significant increase of 10% from $2,024 to $2,025 for the 9 months ended September 30, with a notable jump of 23.1% in the 3 months ended September 30. This growth can be attributed to strategic investments aimed at supporting business expansion. Profit margins also showed improvement, with gross margin remaining flat at 39.2% for the 9 months, but increasing by 10 basis points to 38.7% in the 3 months. Income from operations as a percentage of net revenue rose by 0.5%, while adjusted EBITDA increased by 0.9%. However, these gains were partially offset by higher product costs, showroom occupancy expenses, and delivery transportation costs. The increase in selling expenses due to new showrooms and corporate expenses also contributed to the mixed performance. Despite these challenges, the company's strategic investments appear to be paying off, driving revenue growth and ultimately contributing to improved net income and profit margins. The company's financial performance indicates a positive trend in its operating cash flow. The data from page 14 shows that net cash provided by operating activities increased to $127,538 in 2025 compared to $115,426 in 2024. This increase suggests that the company is generating sufficient cash from its core operations to meet its financial obligations and invest in growth initiatives. The company's debt level has experienced significant changes over the past year. Total liabilities increased by $115,651, 13.6%, from December 31, 2024 to September 30, 2025. However, aggregate revolving credit commitments remain steady at $75 million for both periods. On the other hand, total operating lease liabilities rose by $73,193 from 2024 to 2025. Regarding interest expenses, there is a mixed picture. Interest paid in cash increased from $3,402, 2024, to $3,773, 2025, indicating an increase in interest costs. Conversely, interest expense on lease liabilities decreased by $174 from the 9 months ended September 30, 2024, to the 9 months ended September 30, 2025. The change in interest rates also suggests a potential impact on interest expenses, but no direct information is provided on actual changes. Management's outlook and strategy. The company is optimistic about its future prospects, expecting to recognize most client deposits as revenue within the next 12 months. To drive growth, management plans to invest in new showrooms, digital marketing efforts, and technology upgrades, including a new ERP system. The focus will be on managing growth rate while maintaining quality merchandise and adapting to consumer preferences through an omnichannel business model. Management is prioritizing proprietary merchandise with attractive margins and sourcing directly from factories and vendors to maximize profitability. There were no significant acquisitions or divestitures made by the company in this period. The financial summary indicates a stable and unchanged portfolio, with no notable additions or disposals of assets. In reviewing the financial summary of the company, it is clear that they have engaged in both dividend payments and share buybacks. Specifically, the company paid out a total of $70.1 million in dividends to shareholders in 2024, including a special cash dividend declared on February 29, 2024. Additionally, the company has also been actively buying back shares, with repurchases totaling $2,045,000 in 2025 and $1,277,000 in 2024. Concerns about inventory buildup and supply chain disruption are evident in the financial summary. Inventory levels have increased by $31.7 million in the first 9 months of 2025, raising concerns about potential overstocking. Client deposits also indicate a risk of inventory buildup if orders exceed sales. Furthermore, challenges in obtaining quality merchandise in sufficient quantities and disruptions in receiving and distribution systems pose significant risks to supply chain management. The failure of vendors to meet quality standards and geopolitical events that may disrupt the supply chain are additional concerns. These issues highlight the need for careful management of inventory levels and supply chain operations to mitigate potential losses. That concludes the financial summary for ARHAUS INC. Feel free to comment below, and I will be happy to answer them when possible.